over the past 30 years, from July of 1995 to now, August 2025, there have been 9 bear markets in the Nasdaq. And taking a look at all 9 of those, the first one was in 1997, then 1998, 2000, 2007, 2011, 2018, 2020, 2022, and 2025. And just to be clear, a bear market is any time that the market goes down by 20% or more. So there have been 9 of them over the past 30 years. Now, whenever I see those giant peaks and I see those deep valleys, I think money. What if you and I as investors could time those peaks and valleys perfectly? What if over the past 30 years we could have sold those tops and bought those bottoms? How rich would we be today? How wealthy would we be today? I salivate at just thinking about timing the market perfectly, but I'm curious, literally, how rich would we be today if we were to have timed the market perfectly over the past 30 years? So today we're going to take a look at 2 investors. We're going to look at one investor who just dollar cost averages into the market every single month from July of 1995. Every single month, $1,000, buys and holds all the way from then to now in August of 2025. So it's been 30 years, 362 months, and the total contributions of $362,000. We're going to also look at our other investor who is the world's best investor. They have timed all 9 of these bear markets perfectly over the past 30 years, and they too had $362,000 to contribute, $1,000 every month. The only difference is they timed the market, so they sold the tops, they rebought the bottoms, they waited until there was another top, and then they rebought those bottoms. And we're going to see who does better. Is it actually worth your time and your money, your sanity to try to time the market? How much more would you make as the world's best investor versus just a plain old dollar cost averager? So before we get started, I just want to say thank you for being here. I'm Jacob. I'm building wealth for me and my family. And on this channel, I'm showing you things about personal finance, budgeting, investing, things like that. I'm 28. I'm on a warpath to get to $1 million. If you're into $1 million journeys or anything like that, be sure to hit that subscribe button and give me a like too so other people can find this video and hopefully it helps them on their own wealth building journey. So let's get started. We're looking at the Nasdaq Composite Index on the monthly chart going to July of 1995 to now August of 2025. And our investor who times the market perfectly, they started buying here in July of 1995, bought $1,000 worth of shares every single month, and then they have their first sell date on January 22nd, 1997, and they had accumulated $23,728 worth of shares. They were able to dodge a 22% decline in the Nasdaq, and then they rebought a couple months later on April 17th, 1997 for $26,000 because they were able to rebuy all of their $23,000, and then they also had $3,000, $1,000 a month of savings that they were sitting on every single month that the dollar cost averager was still buying. This person was waiting until their rebuy date to then distribute that $3,000. And that's what they're going to keep doing. So we have our second sell day. They rebought here April 17th, 1997. They kept buying. They accumulated $62,000 worth of shares all the way up to July 20th, 1998. And they dodged a 33% decline, rebought October 8th, 1998. And then they have the mother of all bubbles. They rode this thing all the way up, the dot-com bubble. They sold perfectly. March 9th, 2000, they had accumulated $266,000 worth of shares. They waited for 2 years and dodged a 78% decline. They rebought on October 2nd, 2002 for a total of $297,000. Not bad. Then they ride all the way out through the 2000s, the last decade, all the way up to the GFC. And here's where they sold on Halloween. How spooky. How perfect timing that is too. The top of the GFC was on Halloween. They sold on 10/31/2007, $801,000, and then they rebought on March 9th, 2009, $818,000. Again, dodged a 55% decline. Pretty damn good. This person is the world's greatest investor. And then they ride through March 9th of 2009 all the way up to April 21st, 2011. By this point, they now have $1.8 million, and they started just in 1995. It's not even been a full 20 years, and they went from starting with $1,000 to now they have $1.8 million. They dodge a 20% decline, selling on April 21st. They got super high on 420 and then sold everything the next day. The grass was talking to them. And then they rebought on October 4th, 2011 for $1.857 million. Now, here's where we don't have a 20% decline, another bear market from 2011 all the way up until 2018, whenever the Fed started raising interest rates. Good old Jerome Powell's first time around. And this person went from $1.8 million, rode this bear market or this bull market all the way up to the tippy top, September 28th, 2018. They have $6.3 million. And they say, that's not enough for me. I'm still timing these markets. I'm the world's greatest investor. And they dodge a 24% decline. And then they rebuy at $6.372 million just a few months later, right before Christmas Eve. They said, Santa's bringing me something good. I'm timing this bottom perfectly. And they rebought on 12/24. Then we have the, just a couple of years later, we got the crazy, weird, spooky, whatever you want to call it, COVID crash. They went from $6.3 million on that rebuy from December 24th, 2018, all the way up to February 19, 2020. Man, that money compounds quick whenever you got big numbers. It went from $6.3 million all the way up to $10.1 million. And then just 1 month later, they were able to rebuy the bottom, this 33% decline. They were able to rebuy it on March 23rd, 2020. Now they're sitting at $10.1 million. As you probably guessed, this person is definitely outpacing the DCA investor, but by how much? We will find out. Now we have our 8th bear market here on 11/19/2021. They had $23 million and they sold November 19, 2021. They rebought about a year later on October 13th, 2022. They had $23,722,000. And then lastly, just this year, Trump and his freaking tariffs crashed the market down 27%. They were able to rebuy here in 10/13/2022, just a little over 2 years. They sell all of their stocks again on 12/16/2024, December 16, 2024, $44 million. These big old law of large numbers. This is crazy. 23 million all the way up to 44 million. They double their worth in just 2 years. And then they rebuy super quick here on April 7th, 2025, $44,982,000. And that was in April, and now we're in August, so this person's sitting at over $50 million today. They're the world's greatest investor. This is exactly what you would have as your portfolio if you had started just 30 years ago, and you timed every single market perfectly. So why doesn't everyone do this? I mean, if we look at the pros of being the world's greatest investor, there's a lot of them. First of all, you're filthy stinking rich. And even in today's dollars, if you got over $40 million, you're filthy rich. You're not just rich, you're filthy stinking rich. There's not a single thing you really can't buy. You also get to avoid all the crashes. You don't have to sit through all those drawdowns, and you're not sitting there worried thinking, will the market come back? You avoid that crap. And then you also get God status investor. And why is that? Because there's been nobody ever in the history of investing to ever time the market perfectly over and over and over again. And if you really think about it, in those 9 bear markets, you wouldn't just have to time the market perfectly 9 times. You would actually have to time it perfectly 18 times, because you have to time the top perfect, and then you have to time buying at the bottom perfect. So that's 18 times. There's no one who's ever done it, ever. I mean, there was Bernie Madoff, but I don't know if he counts. He never, ever had a single negative year until he was found out to be a Ponzi scheme in 2007. So the only person to kind of do it was Bernie Madoff. But other than him, no one's ever done it. So you do get to be like God investor. Like you were the Warren Buffett of Warren Buffett. So not even Warren Buffett's been able to do this. So that's the pro to it. So could you do it though? And my number one question is, if you could, I'm not saying you can't, because maybe you can. Who am I to say no one can do it? But my number one question to everybody is, if you can do it, let's look at the Nasdaq composite today. right here, August 2025, we're trading at 21,000 in the Nasdaq Composite. And my question to you is, are we going up or are we going down? And if we're going up, how high are we going up? Are we going up to 24,000? Are we going up to 26,000? Are we going to 28,000? Should I sell today? Are we going down? And are we going down all the way to 18,000? Are we going down to 16,000? Are we going down to 14,000? Or are we going sideways? Are we just staying at 20,000 now, just sitting here hanging out for the next couple years? What are we going to do? Should I sell my stocks today? Should you sell today? If you can't give me an answer, then that probably means you're not cut out to time the market, because if you were the world's greatest investor, you would know exactly what the market's going to do tomorrow, what it's going to do in a week from now, and what it's going to do in 2 weeks from now. And if you don't know, then you're probably not going to be able to time the market all the time. So what's the alternative? Well, the alternative is the dollar cost average investor. And let's take a look at their results. If they would have started investing in July 1995, $1,000 every single month, they have been contributing from then all the way to now, total of $362,000, 362 contributions. They would be sitting at a portfolio value of $2.445 million. That's pretty good. I mean, that's a gain of over $2 million, 675%. And they just automate their investing every single month. First of the month, they just buy $1,000, buy $1,000, buy $1,000. They got 675%. Now, of course, if we compare that $2.4 million to the world's greatest investors sitting up there at over $40 million, that's a difference of $40 million, right? And of course, we would all prefer to be the perfect investor, the world's greatest investor. I mean, come on, you're filthy stinking rich. And if you're sitting at 2.4 million as a dollar cost averager, you're doing pretty good. You're just not filthy stinking rich. You're just like doing good, right? You're comfortable, but you're not filthy rich. But unfortunately, it's just not possible to be the world's greatest investor. And I've personally given up on trying to time the market. I want to show you that I went all in. I just said, I'm going to start indexing. I'm going to start buying S&P 500 ETFs. I'm just going to start doing the regular contributions every single month. And I started doing that in January of 2021. And to show you what my portfolio looks like from January 2021 to now August of 2025, I've contributed $473,000 and my investments are now at $212,000. My investment changed. So I've now earned just in gains over $200,000 in just a little over 4 years, about 4.5 years. And here it actually has my ending value at $692,000. So it's not filthy stinking rich, but I'm not even 30 yet. And I've already gotten almost a 50% return on my portfolio in just 4 years. So it's working for me. Now, is there an in-between? Can you time the market? Can you save up for crashes? Can you do better than just somebody like me who's dollar cost averaging into the market every single month, or like our investor who's been doing it for 30 years? Maybe. I do have some other videos on that if you want to check them out. But here's the thing, every single time you don't time the market perfectly, the less likely you are to outperform the dollar cost averagers. So over time, it actually becomes easier and easier and easier just to be a dollar cost averager and know that you're going to make out pretty good. I mean, if I'm 60 years old and I'm $2.5 million. Personally, I'm happy, that meets my needs, but that's not for everybody. But there you go. You got the results. If you want to try to time the market, you want to get God status, you want to be filthy stinking rich, you should definitely try it. Who's to say you won't be the person to do it? I doubt it, not to be the negative guy here in the room. I doubt it. But for me and for most everybody else out there, I think dollar cost averaging is the way to go. You're not going to be filthy rich, but you're still going to be rich. So if you like this video, if you got anything out of it, be sure to subscribe. Give me that thumbs up and I'll see you next video.